morning, everybody. Welcome to the Culture Shock Investment live stream. Owner of Culture Shock Investments, Michael Clark, here with you. And we are going to be doing some live trading today. We did the charting session earlier this week already, so we got price levels set. And now it's just about reacting. It's been a volatile week with oil prices jumping due to this war in Iran. So we got to see what is triggering today. Let's jump on these charts and see what is popping today. We just opened about 15 minutes ago, so we're in the first 15-minute candlestick. This is the Qs. You see the Qs is playing around with our call entry level right here. So we're going to keep a close eye on this area. Oh, did not mean to do that. There are two lines here. Let's get rid of this second. Unnecessary. I don't like unnecessary lines on my chart. Alright, so we had call entry right here, right around 610. We're going to see if we can close the first hour of the market above there. That'll confirm the call entry, and we could go ahead and ride that wave up to 616. Or we will stop out if it pulls down from 610 if we get below 606.70, this level right here. What made me pick this support? If you see, we have a little candlestick with wick right here, a little buying block as well. So these are indicators that I use. You know, you have the buying and selling gaps. Where is it at? Lux Algo fair value gap. That'll help get these little boxes right here on your chart, show you where there's buying support and selling pressure coming in. So I see that we had some buying support right here. If we dip below that buying support at 606.90, that means it's time to get out the calls. That means the support has been lost, at least for intraday basis. You don't want to get caught up in that kind of pullback. So we will put this as a stop level if we enter the calls here, but we still haven't entered calls. As you see, we haven't gotten confirmation. It's touching up here, but it's wicking down, showing you that there's some resistance here at open for SPY. All right, but that's why the levels don't lie. You gotta trust the levels. Yesterday we broke above it. We traded above the level for a little bit, but never touched target. It made about a $3 push past the call entry level. And I do have some call targets for the Discord. What did I have the call targets for SPY this week? Let me see. SPY, we had so this is the Qs we're looking at. For the Qs, we had 612.50 then 614.05. So I kept it short with the call targets because I saw the volatility in the week. So it gave us the 612.50 target yesterday. You jumped in this Q call yesterday, you could have took profit right around here. And then we could be jumping back in for a retest today if this is confirmed. I think we're going to have a pullback if you ask me. I think especially if this Iran war continues to drag out, we're going to definitely get a pullback in the market. We're going to keep bouncing our head off of some of these support levels because we're going to get bounces. And these bounces usually come because there were orders already sitting at certain price levels waiting for the dip. And those orders get triggered a lot of the times when those prices get hit and they cause the market to bounce up. Even though the person may not have necessarily wanted to buy under these conditions, they obviously had it set to buy at that price for some reason, that they feel like the market's going to catch support there or whatever. But people have a lot of buy orders set at certain prices to trigger so they don't miss these dips. But if the conflict continues to extend, then you will see that pressure continue to build on the market. And all of those dips, dips that keep getting bought up that you're seeing back here, you see we have a dip right here that was bought up. We had a dip right here February 17th. This dip was bought. Let me show you in the chart. This dip right here February 17th was bought up. We pushed all the way back up to 616 from 593. That dip was bought, and then we just had this recent dip right here bought. So these could be orders that have been sitting in here waiting to buy at this price, and they keep coming in around 590. So someone or some group of people do not want to see the market really dip below 590. and that's why they keep coming in with heavy buying support right here. But if the Iran war drags out, drags out for months instead of a couple weeks like they expect, then that pressure coming from up here that keeps knocking it down will get stronger, and it'll start knocking it down from lower prices. Like right here, we might start putting in the lower high instead of coming all the way up to 616. We may start getting stuck around 612. And then we might start getting stuck around 605, not being able to get above there. That's going to show you deterioration in the power, in the bull's power. So it's going to become a bearish market. We're already starting to enter a slightly bearish trend on the daily. You see here, these are our chart patterns. Let me show you the trend we're in right now. Let's go to the trend. Let's go to the trend chart. I was looking at some micro strategy yesterday. Let's go to the trend. Let's see what the trend line looks like. So Q's on the daily. Yeah, they were in some wild consolidation. So let's go down to the 6 hour. Let's see if we can identify any trend on this chart. Yeah, same thing. Chop, downtrend into uptrend. But ultimately, what I'm going to show you right here, what I see is I see a downtrend that is potentially getting ready to break. Yeah, let me draw a parallel channel. Let me do that for you. Let's do that for you. Put it on a daily. So this downtrend right here, I'm gonna draw a trend channel. From this high that we hit, we could draw a line down, straight down from that wick, and then to the low in that range, on that trend would have been this, I'll say this low right here. They're all already hit around the same level, around that 590. So we'll draw a line right there, and this will kind of give you the indication of the downtrend we're in right now. So off a daily downtrend, we'll say we'll break above that downtrend if the Qs could start closing above 615. And you can see based on the downtrend, it was hitting its head on the top of it right here at 616, and then we rejected. And we're gonna see this will keep creating lower highs. If we're going on a downtrend, you keep getting lower highs. That's what happens. And lower high means every time it starts to push up, instead of coming to 617, next time it comes up to 613. The next time it comes to 605. The next time 580, 590. So you want to get ahead of the trend and trade in favor of the trend. Don't get caught in these push-ups and thinking that this is going to lead to a breakout unless the trend tells you so. When the trend says breaking out is occurring, then breaking out is occurring. The thing with the market is that you don't have to do too much guessing. Once you have the tools and understand how to use these tools and what they're telling you, the guesswork is removed. At that point, it becomes about discipline and consistency. Discipline and consistency. The trend lines are going to tell you what's happening. The price levels are going to tell you what's happening. And then you got to apply your consistent strategy to that. You got to enter and exit with confirmations. You got to take profit at the percentage that you allocate and the percentage that you set in advance. Don't say, I'm going to take profit at 15, 20%, and then you up 30%, you're still not taking profit. And you up 50%, oh my God, I could go up 100%, you're still not taking profit. And then you take a loss on that trade. That's greed. That's what kills accounts. Not the market. The market, not market manipulation, not understanding the charts, not any of that. Most of the time that I see people lose in the stock market is because they're not listening to what their strategy is telling them, what I'm telling them, or what the price levels are telling them. They're going off of instinct, of emotion, of feeling, of what they feel is going to happen. You got to listen to the charts and see what the charts are telling you is happening. This is not stock market is not a place for feeling. Oh, I feel like this may happen, or I feel like that may happen. The stock market will surprise you. Every time you think you feel something's about to happen one way, a whole opposite occurrence could happen, and it'll surprise you. So don't get into feelings. Get into your technicals and the fundamentals. Look at the news. The news is the only place where you should get some sway where you may think things are going in the market. Don't do it based off of a whim that you got. Has to be based off of solid news and technicals. Those two things combined, pointing in the same direction, you really have something good going. If they point in opposite directions, you got to do a little deeper research. And I always say if they point in opposite directions, I always say then you want to track yourself with the technicals. Because you can have bad news come out and you think it should tank the market, but the technicals say otherwise, and it starts catching support and bouncing in certain areas. All right? It's a little gem for y'all. Let's get back to these charts. So we had a downtrend right now on the Qs. As you see, we're sitting in this downtrend. And let's go ahead and look at what alerts we have triggering. Let's look at the alerts this morning. We did the price levels this week, so if you could go back and look at the price charting session we did on Monday, you will see that we set these levels. On the ETFs, I don't set all my levels live. I set a lot of them private for the Discord community. Like this Nibius call entry, this is one that I was watching. I'm watching Nibius this week. When they got above 98.77, this is call entry right here. So I like them to kind of take a push back to like above 100. So I'm actually going to look to enter that call right now. Let's look at some, let's look at the options. Let's look at the option chain on it. Let's see what Nibius prices are going for right now. See which one we want to buy. See which one has some good volume on it. Theta is not too crazy. So right here, the theta is not ridiculous on these. Alright, we got a $30 theta, which is about 15% on a $230 contract at a 106 price target. Let's see, newest price target do I got on Nibius? Let's pull up the Nibius chart. Where my levels at? Where my levels is at? Where my levels is at? Alright, so you see, even with me having advanced understanding the market, I'm not going to just go on for whim and say, oh man, I see Nibius, this is a call entry, let me just set an arbitrary take profit because I think it's just going to push. Oh, let's see, it's going to retest highs. Let's go to 140. No, that's ridiculous. You got to set realistic price levels to help, I guess, stage yourself into your trade. You know, leg yourself into your trade. It's not all in at once. Sometimes there are times when you got to go all in based on the levels, what they telling you, but other times it's letting you know to scale in and how much you should be scaling in based on how many resistances you see coming above. So each one of these levels that you see right here, each one of these purple lines that are going to come above where the current candlestick is, this is considered resistance. So anytime I set a price level above where we are right now to the upside, you're going to look at these as resistance potential where the stock can start going back down once it hits those levels. Like it did these last, three months. These are monthly candlesticks. So you see on this month, Nibius went up to 103, came all the way back down to 91. This month, it went all the way up to 110, came all the way back down to 86. This month went all the way up to 110, came back down to 90. So now this is going to be another attempt to push back above this 110 range, which is what I'm banking on it actually accomplishing on the 4th time's a charm. But you never know. So you set your take profit targets earlier. And you can always hold a runner if it looks like it's extending to this last level up here, the final boss. You can always hold a runner through the final boss, but you want to have taken most of your profit and secured the bag down here. So you go in heavy early, secure the bag, and hold the runner. Let's look at it on the hourly chart real quick. So we see we have our target. We see we have our target at 102.03. Let's go ahead and jump in these Nibius calls. We're going to jump in. We're going to jump into Nibius. What are we looking at? The 104s? We're looking at the 106s, right? These expire March 13th, so these are next week contracts. Let me go a little further out. Let me see what we can get them for over here. 106s. A theta of $24. So this theta negative 0.24 means every dollar that Nibius goes in the opposite direction, these are calls. So every dollar Nibius goes down, I'm going to lose $23 on, I'm going to lose $24 on this contract or $23 on this contract. Now you can look at this number right here and you want to compare it to what the ask and bid price are. So $24 minus 400 or $20 or 400 or $355. So if you bought this contract at $420, every dollar that Nibius goes down, you're going to lose $24 off that contract. So you can start looking at that and calculating how much money you could potentially lose before getting into the trade. If you're getting in it now and you have a stop loss level set, let's say I tell you guys stop loss level on Nibius for this position right here, we get in at 98. You want to stop out if we get below. Let me see, I had a in the price level chart. Let me see what I put for Nibius. I even had Nibius stop out level right here around 94.70. Okay, so I'm gonna put the line on the chart. Not there. So why in this area? So if we break down from 98, this gives you a good range because Nibius is a little volatile. So this allows you a certain range to trade within that volatility without getting stopped out too quickly. You don't want to jump in a stock and get in the call on a volatile stock and have your stop set so short at like $1 beneath it, because it's more likely than not it's going to stop you out really quickly and then proceed to go up. So you want to make sure your stop is something that you could sustain through the trade, and if it dips below that level, you definitely know a reversal is coming. So I picked down here 94.80 because you see we have bottom wick right here on this daily candlestick. Now, what day is this from? This is from, god damn it. This is from the 23rd, February 23rd. The bottom wick from February 23rd. If we get below there and the top wick of, what is this, February 11th. This is really sitting on the top wick of February 11th and February 23rd. We get below those levels, you got to stop out the call because we're near put entry at $91. Okay? So what do we want to wait for right now? We want to wait for confirmation. Like I said, on 30 or hourly. Right now, we got it on the 30. You could wait. And we got it on the hourly too. So I'm going to enter this call because that's the rules of the game. When you set rules, follow your rules. It takes all the thinking that you have to do, all that emotional thinking out of it. You don't want to be an emotional thinker. You want to set rules, set standards, and just follow and apply those. Sometimes your emotions may contradict and be like, oh, I don't know about this, man. This seems a little risky. Follow what your technicals are telling you and what your plan and strategy tells you. If it doesn't work, it doesn't work. But every time you go against your plan and strategy, even if it ends up not working, you see, oh man, thank God I didn't take that call because it rejected and hit the stop, blah, blah, blah. Every time you do that, the more you do that, the less faith and confidence you're putting in your own strategy, and you're going to start to not listen to yourself more often, and you're going to look at the strategy as like a side thing. It's not going to be your main focus. It's not going to be your main guidance in the market. You're not going to let your strategy guide you. You're going to start letting emotion guide you. And that is not the way you want to trade in the stock market. Trust me, it may benefit you in a few occasions, but more times than not, that emotional trap will catch your ass. So be careful. Let's get back to this Nibius chart. So we see Nibius here. Let's see if we get a good call entry at $98. Let's see if we can catch it close to 98. If I can, that's better. I want to see what these 106s. If I get these 106 calls for less than 350, I might take that. Let's look at it. Let's keep it on the watch list right now too. Oh man, I saw that running yesterday. All right, let's go ahead and put this 106 call on the watch list and see if we could catch it on a quick sale. I'll do that as well. If I see a target hit of mine, if we get some rejection off a level, that's good because I expect a rejection off of my call entry levels, especially if it's a good level. When the price comes up to a level or down to a level, if you set a good price level, or if you had found a true level, then you're gonna have some kind of reaction happen at that level. It's not gonna just blaze right through. And more times than not, if it does do that on a good level, it's gonna come back down really quickly. So right now, Nibius is gonna play around this call entry. I may not take it on the first confirmation. We may wait, see if we catch it at a better price. If it comes down and starts holding support now at 97.50, I'll be more likely to take it because we're trying to get a good price for our call entry, which is right here at 98.77. So sometimes with call entry, because you wait for confirmation, you may catch it a little bit higher because it comes in and it isn't confirmed on a 30-minute or hourly until that close, and that close could close higher than the call entry. So sometimes you may pay a little more and ride it up to the next level. Or sometimes what you'll get is you'll get the confirmation close on an hourly or 30, and then you'll get a little rejection coming in, and then it'll pop back up to the target. So either way, once I get my confirmation candlestick, I'm looking forward to breaking that direction. Unless we get a complete engulf in the opposite direction. Like if this candlestick right here was to engulf this and go completely down, even then I might be tempted to take a call because I'm assuming that based on my level breaking and confirmation coming in that we're going to push back up. But that is less likely that I'll take that call if we get an engulfing candlestick all the way right back down, because that shows immediate reversal right back down to the downside in the morning. And you don't want to play engulfing candlesticks and thinking that it's going to reverse back up to you and engulf back up for you, because now we're talking about chop at that point. When you get to engulfing candlestick down, like this candlestick engulfs this candlestick all the way back down, and then we come down here and we engulf all the way back up. Now that after you do that twice, that's considered chop to me, because especially on 30-minute or hourly time frames, you don't usually get engulfing down, engulfing back up, unless there's a lot of indecision in the market that day, and that is not something you want to be trading. So as long as we don't get a full engulf back down, this is considered prime entry. You know, you could get discounted entry on your call. So that's what I'm gonna look for right now in these Nibius calls. See if I get me a discounted entry. And we're going to ride that wave up to 102 and then 103.95. That's gonna be the move for the live today. Man, these copper calls got smacked. I should have took profit on that copper call yesterday. Taking a loss on that now for no reason. Ain't that some shit? All right, let's go ahead and jump into this. Jump into this Nibius call. Let's look at NVIDIA, because NVIDIA and Nibius are tied pretty closely together as well. Look at Tesla all over the place again today. Tesla is crazy. So you see Tesla, my NVIDIA calls in near call entry as well. And it aligns with the price movement in Nibius pretty well. Let me show you the NVIDIA chart. So NVIDIA right here, you'll see we got the call entry at 182.38, and it's been flirting with that this morning, and that's in alignment with Nibius. They're kind of doing the same thing, and I think NVIDIA is about to have a nice push. So let me go ahead and jump on this call before they start taking off on me. Going to get in these calls right now as soon as these contracts sell. I do not want to miss this push. I'll set the alert up here, and the alert the two targets.
Good morning. Good morning.
Good morning, morning, my guy. What's going on?
You see, OpenAI and TTD trying to lock in.
OpenAI? No, I didn't see that talk. What they talking about? What OpenAI and TTD talking about?
Talking about reaching out to TTD for advertising sales.
Oh yeah, they need it now.
Mm-hmm. Oh. One of the biggest insider buys I've ever seen in my life.
On TTD?
TTD CEO bought $148 million worth of TTD at an average price of $24.68.
Oh yeah, he's ready to come up.
Oh yeah. And then listen, those two news came out at the same time last night.
And it came out last night. That new. Oh, so what TTD had
Last
going on?
night.
What TTD
Last
got
night,
going on?
like around after the market, around 6, 7 o'clock.
And look at how it gapped up overnight. Look at that gap up.
Yup, crazy.
That's ridiculous gap up, bro.
Right.
It's like I feel like they be trying to squeeze people out of good stuff, bro. Because TTD's always had good fundamentals. Like
TTD is about to rock it, bro. It's going to rock it.
They play games like this. I don't like how they play those games.
Bro, so somebody recently did a test with TTD advertising services versus Amazon.
Way better.
You ready for the outcome?
What was the outcome?
TTD advertising reached a 70% higher niche market than Amazon did for 30% cheaper.
For 30% cheaper, yeah, that's efficiency. That's all people want as an advertisement efficiency, especially nowadays.
It reached a more targeted,
more niche audience, yeah.
Right, it reached a 70% more efficiency.
Yeah, that's about to blow. Your mic was breaking up a little bit though.
And it was
TTD.
cheaper.
TTD. So here's the chart. He had a nice gap up on TTD.
I'm stream, right? And TT streaming a streaming software that DirecTV uses, and I fuck with it.
You know what TTD target is on my chart? The falling wedge target that they've been in. They've been in a falling wedge on the daily since December of 2024. They try to fuck me with TTD. They did me dirty. But the target on it, on the falling wedge, is $138.
That's fucking crazy.
Yeah. Let me look at the weekly really quick. The same thing on the weekly. Let me look on the monthly. Oh, it has a monthly falling wedge. I wonder why that target was so high, because it's a falling wedge all the way up to the monthly. Oh, yeah, this shit's about to pop.
Yeah. Whenever they have their next earnings, I'm going stupid. I don't care. I'll take the loss.
Their next earnings is on March 26th.
It's in May. No, it's in May.
I'm sorry, no, May. I said May. No, let me see. Yeah, May 13th. March 2026. I said March 26th. Yeah, it said May 13th. It's on a Wednesday. Middle of the week is going to be.
Let's get it.
Okay. Yeah, man. Definitely. You see them articles, post that in the Discord so the people can see. Cause that's big news.
And I hear they trying to break up Google again.
Yeah.
And guess what they're going after?
Which one? What part of it?
In terms of what they're trying to take. They're trying to check out Google's advertising business.
TTD really gonna take off. If that shit go, if that happens, TTD is going to $300. If that happens, talk about 130, 300. If that happens, boy. Time to start loading back up on the TTD longs. If I catch the ass on the pullback back down to 28, I'm gonna jump on the ass right there.
It might come back down to 24 right where that CEO got that buy price. If it does, I'm full porting. I don't care.
I'm going crazy.
Down to 25, I'm full porting.
Yeah, I'm gonna start legging in at 28. And then if it comes down, like you said, if it comes down to this 24 with the CEO part in that,
24, 25, right.
definitely loading the boat down there. Yeah.
148 million, nigga?
Yeah. Yeah, you already know what that
For
means.
one, how does Steve even got that type of bread? TTD making that type of bread? What the
For
fuck?
him to have money to
What
just
was
to spend on
TTD
shares
known
like that,
before?
he had 100 million on the sideline just waiting to buy shares like that.
If TTD do what it's supposed to do, if he's not already a billionaire, he about to have another billion.
He's about to be a billionaire.
Right. Bruh, I ain't gonna lie, that shit is crazy, boy.
Listen, man,
Insider trading.
they numbers has always been strong, so that's why I didn't understand why they was dipping like that. But when company has strong fundamentals and they ran properly, a lot of the times, whatever stock dip they going through, so most of that stuff is going to be short lived, like a year, maybe a year and a half if it's overextended. But most companies, if you're a good company,
Right.
you're going to bounce back.
So that's what I'm gonna do. I'm gonna go look for companies with real good fundamentals looking terribly technically.
Yeah, that's what I have on my watch list, bro. That's what most of my watch list is comprised of, like strong fundamentals but crazy bad pullbacks recently.
Technical?
Yeah, crazy bad technicals
Right.
recently, but the fundamentals are strong. Like they got strong capex, they got strong ROI, they got strong. They have good EP earnings per share every quarter growth, earning EPS growth quarter over quarter is strong. So but yeah, definitely, if you set up your own screener like that, you can set it up with those filters and what you're looking for, and it'll filter all that out for you. And I like the screener because it updates daily. You know, that's what I like about the screeners because it filters and it updates it daily based on the parameters you have put in. Like right now, on my technical screener, yeah, this is based on technicals. Let me see. My bounce screener is the one that has it where most of the time it's going to show you strong companies that's on a recent dip. ASML popped up on my bounce screener list just now. ASML, ASML has not come down. I want ASML to dip down to like 1,000 from me. That shit will not come back down to 1,000 to save his life, man. It's at 1,400 now, I think, and that's considered a dip on it right now. Who else I have on this list? Lamb Research. I was talking about them earlier this week. A lot of the gold companies are on pullbacks. A lot of the gold mining companies, because gold had a pullback. So a lot of them popped up on this list. And the accelerated growth screener got skinny this week. Let's see. We got Nvidia, Avgo, Palantir, Arista, DoorDash, Robinhood. I'm liking Robinhood to bounce. I like DoorDash to take a good push too, because DoorDash been beat down over 22% in the last 6 months. I see DoorDash with nice bounce back. Let me look at their chart real quick. Let's look at the DoorDash chart. I want to wait to see how this nibby is, how this 30-minute candlestick close. As long as this 30-minute don't engulf, I think I'm gonna jump in that call. But let's look at Dash. Look at DoorDash real quick. DoorDash. Oh, DoorDash may be a play, my boy.
DoorDash?
DoorDash.
What they fundamentals look like?
DoorDash has pretty solid fundamentals. Let me see. Let's go look at their fundamentals.
The only thing I'll be looking for with fundamentals is rising revenue, low debt, and profit margins growing, bro. I don't even need profit margins to be growing, but revenue got to be up there and low debt.
Mm-hmm.
Those are the main two things.
DoorDash revenue growth over the last 12 months has been about 28%. That's pretty good. Oh, sorry, wrong button. Then you have let's look at their balance sheet. Their current ratio is 1.26, so they got more cash on hand than debt. So let's open this up. Open it up. Let's see what's going on. The operating expenses, total revenue 1.29 billion. Operating income 535 million. Year over year growth is down 35%, so that wasn't good for quarter four. That was in December. 2025. The quarter before that, though, they had 270% year over year growth. Let me see some. I don't know how that net income showing at negative 33% when the year before the net income in September. Oh no, this is 2020, 2024, December 2024. We gotta look at. Oh, here it goes. Oh, that's why. Yeah, December 2024 was a crazy year for them. They went crazy that quarter. Yeah, that's why it's down 33%. They were up December 2024. Their revenue, their net income was up 2,900%. So this year is down 33% from that. That's why it's down like that. Okay. Let's look at the balance sheet. The balance sheet. Net debt. They got $11.27 billion in debt. I don't like that. They had 14 billion. They had 14 billion in September of 2025, so it went down to 11. At one point, they had negative. That was in 2023. They need to get back to that where they had cash, more cash than debt. Yeah, no, yeah. Robinhood is a. I mean, no, I'm looking at. Oh shit, this is Robinhood. I'm looking at. I'm tripping. I'm supposed to be looking at DoorDash. That's Robinhood. I was wondering. I'm like, damn, these numbers don't look that great. These fundamentals don't look too great. I'm looking at Robinhood. I'm thinking I'm looking at DoorDash the whole time. That's funny. All right, so Robinhood, DoorDash net income is up 51% year over year. Okay, that's pretty good. I like to look at the operating income year over year is up 70%. The balance sheet we looking at, there we go, net debt negative 2.49 billion. That's what I'm talking about right here. Okay. So they have $2.49 billion of cash on of net assets, of total assets, more assets than liabilities. So that's beautiful. Let's look at their cash flow. Their cash flow as of December 2025 was down 18%. they made some badass investments. Their cash flow from investing activities was down 1,800%. They spent $3 billion in investments last quarter. On what exactly? Let's take a look. Let's dive into numbers. Purchases and sale of business. What did they purchase? So they must have acquired. They acquired somebody. DoorDash acquired somebody last quarter for around $2.5 billion. Who did DoorDash buy? Let's look at the news. Maybe someone in the chat knows already. Let's see. Deliveroo. Okay. Yeah, $3.9 billion purchase of UK-based delivery rival Deliveroo. That's what they spent this money on. Okay, so they bought out the competition. All right, that's good. That's not, So it's also good, when you're looking at these statements, everybody that's on the live, when you look at these statements, you want to know why some of these numbers show the way they show. You look at this and you're like, wow, that's crazy, decrease in cash from investment activities. But this just shows a big investment, and they made it into a competitor that they bought out, which is why it was so much. Cash from financing activities, $19 million down. So their free cash flow took a hit this quarter, mostly because of that major investment they made in Deliveroo. So fundamentals on DoorDash are looking very strong, my man. Very strong. Net debt, good. Income statement, strong. Back to the chart. They got to get above 190.
Good morning. Where the money at?
Morning, man. What's going on? I'm looking at DoorDash right now. That's where the money's at. That's where the money's about to be, at least. The money today. Where the money's at today. We was looking at Nibius. I was looking at Nibius calls. If it could go back to call entry. It had a little rejection up there. I'm going to put this level in right here on DoorDash and set the alert because we don't want to miss this play when it happens. All right, so we got the DoorDash play set up. That's a beautiful, beautiful discovery right there. Looking at the fundamentals. That was an interesting company that popped up on my screener list, accelerated growth screener. All right.
Delivery service gonna be big.
Yeah. And we was talking about TTD earlier with advertisement. Set a call entry for them.
Who the hell is this? Hold on.
Alright. So that's all set up beautifully and lovely. Now, so we added 2 new perspectives for our potential long plays right there. TTD is a long one. That's like a year out position you could set up for. Same thing with DoorDash. I like DoorDash for a strong recovery back above, eventually get back above 240. That's going to be a key area for DoorDash. So that's a long play as well. I say that's more like 3 months out. The TTD, I want to say you want to hold that for at least a year. So if you're looking at TTD contracts, I would look at some contracts that are probably 2027 expiration. And those contracts aren't too expensive, believe it or not. Let's look. Let's take a look. January 2027.
I like got smacked again, boy.
Market's got, the whole market got smacked. Look at that rejection on the market. Look at that wick. That wick on the daily. Sheesh, the Q's too. So that means Nibia's play is probably dead now because it's going to engulf. Yep, look at that, getting ready to engulf like we just talked about. Engulfing candlesticks. You do not want to jump in on engulfing candlesticks. That is a strong reversal. Unless you want to play to the downside, you can scalp it down. But even then, you're playing tricky games, so it's a volatile week. Be careful. Iran and all that stuff is not going to help the markets be stable any kind of way. If anything, I look at every real big pump right now as a put opportunity. You could scalp things on the way up, but I like put opportunities here until we get a more clear understanding on how long this thing may last, how long this war may last, and how much is going to affect inflation, because that's what everybody's watching. How much is this war going to affect inflation? They want to see how it's going to affect gas prices, because oil is going to go up. If oil continues to go up, let's look at oil really quick. If oil continues to go up, I think last time I checked it was around like 70. Let me look at oil. U.S. oil, $78. Yeah, if this U.S. oil at any point gets up to, let's see, back above $90, if it starts pushing back above $85 to $90, we're going to have a crazy pullback in the market. And then it may start testing that $100 range. When it starts testing that $100 range, that's when you know we have problems. We have big problems. Problems you don't want. You don't want that smoke. Trust me. Let me see. I'm looking at it on the wrong different chart. Let me look at that on this chart right here. Let's pull up oil. So right now you see conflict in Iran. Boom. Oil pops up. Jumps up crazy. This is going to cause problems with inflation if we sit up here for too long. So they want to see this prices come back down. Trump is saying that we may see him go back up before we see him come down. So that means they expect intensification in the war before it starts to cool down. Iran is not going to just back down. They're going to be fighting pretty intensely for, I believe, this could last for months, as you ask me. I think this could drag out for over a year if they're really going to be about that. And that'll be not good for the stock market. That'll be bad for inflation more than anything. Not even the stock market, for inflation. Cost of everything will start to rise drastically. But you see back here, where did we have this? What was this? This is September 2023. Let me see something. Let me see. Yeah, if we get above the September, if we start retesting these highs from back here in April 2024, then we are going to we're going to have a really bad pullback. So let me put a level here, an alert. And I want to put one more level because this is another daily level. These are weekly levels, so I want to put another one where I see some resistance coming in right here at $80. So $80.68 is definitely a level on oil. Once we start breaking above that, have a high chance of testing $87, and then it could go to 94. Above 94, it's getting ugly. Something terrible is going down. Let me look at something real quick. Let me overlap this. Oh shit. I put the right symbol in there. All right, there we go. I want to see something. All right. Let's look at the correlation between pumps and oil and what that does to the S&P. a look and we could see back here, pumping oil led to what? A pumping oil back here led to about an 8% decline in the S&P, 8 to 10%. Last time we had a push up in oil, when was that? That was, last time it was up here, it was around October 2023. And we had another dip right here in the S&P. You can see this little dip right here. This is by percentages. So we had another, what, about 5% dip right here in the market when oil spiked to around this $85 price that we had marked. So as you see, anytime oil takes a spike, you'll see the market dip with it right afterwards on this chart up here. So you see this big dip right here. This when the whole market was dipping, I believe. This was that April. Yeah, this was that April dip. Everything was going down. This was tariffs. That was tariffs right here. That was tariff talk. Let's see. Had a natural recovery back up to its natural range. And we've been sitting there ever since and kind of creeping down or staying in the control range. Well, oil, you want to keep it in the control range to keep the prices of goods and services controlled, because everything has to move using oil. So oil goes up, the cost of everything starts to go up. All right. So if we get a dip to $87, what we saying about an average 5% dip in the market when that happens? So we could just, there ain't no guesswork needed in the market. When you have the numbers in front of you, just use the numbers you got and leave the guessing for the gambling. So from where we are now, we've been consolidating in this range. I say if we have about a 5% pullback, that'll pull us down to around, what is this, 645. If we have a 5% pullback, if oil continues to push the way it is and the Iran war continues to stretch out the way it is, we will come down to around 645 at least. And it's funny because we do have support right down there. There is support right down in this area at 645.75. What you think, G? 645? Oh, I don't know if you did. Boss, what you think, man? 645 on SPY?
Man, 640.
640, right? It could get ugly out here.
Ugly.
I'm saying Microsoft got for us, and I should have bought some shorts off of pure hate.
Just a hate, just how dare you go back up? How dare you go back up above 410?
But if Microsoft keep pushing, because Microsoft pushing more than anybody else right now. So if they keep pushing like this,
That's what I said. Microsoft is always the first signal. It's always the first time.
you know. I talk my shit about Microsoft, but I ain't putting my money on it.
Yeah, you ain't gonna short their ass. I know that. Not down here. Maybe when it was above 500, shorting would have been, yeah, I can see. But down here, I don't know. You showing Microsoft down here, boy. You must feel like doomsday is coming. Because Microsoft has heavy support on the monthly right in this range. An overextended dip.
So I said I need to see 380 on Microsoft, man.
Yeah, overextended dip will pull it down to that 380. That's last month's low. It came down to 380 in February. It touched 380. It already gave you that. I don't know if it's going to give it to you again, though.
I need it again.
If Microsoft put a 2 up on this monthly, that means by the end of March. If Microsoft gets above 430 before the end of March, it's a 2 up on the monthly, and then it's up. It's up. It's going to be up. The market may dip a little bit. The Iran war and all that conflict may cause a little dip in the market. But if Microsoft shows recovery, that means that dip we're about to experience is going to be short-lived, and the market will bounce. So I'll buy that dip up. But if Microsoft is tanking and the market is going down because of oil inflation, then yeah, you got to be careful. And BK, the Illuminati.
Bouncing right here.
Is it Apple? Let me check on the Illuminati. The Illuminati holding above 115. As long as they hold above 115, the market is all right. They start getting back below 115. Bank of New York Mellon, then something may be going on. Let's look at Apple. Let's pull up Apple. Apple on the daily. Apple had a Head and Shoulders. Oh, look at this. It had a Head and Shoulders that played out perfectly. These pattern recognition on this trading view is definitely a strong tool. That shit came right down to the Head and Shoulders target. The Head and Shoulders target on Apple was down at 244. And it gave you that, it told you that was going to happen on January 2nd. It was telling you that was going to happen. That didn't happen until end of January. It hit 244. And that was the target. And ever since it hit that target, it's been bouncing back up. It has no new pattern developed since on the daily. Let me look at the weekly. No pattern on the weekly. So we got inferior time frame patterns. Let's see, the 6 hour. I trust the patterns on the higher time frames more than the lower for sure. But the lower time frames can show you some things sometimes. So on the 18-hour time frame.
Slow down shit.
Apple got a rising wedge. They got a target on that at 221. Sheesh. Not 221. Right. But I think we gave out some nice gems today for some potential long plays with DoorDash. A short play here with Nibius was potential, but that didn't play out because you see they engulfed and came right back down. So we never jumped in that call. And we had TTD, another play, another potential long play for y'all. So make sure anybody that was in the live today, you marked out those 3 companies for one for short, 2 long, potential long plays. And then, of course, we did the charting session live on Monday. Go back and check out that video and get your price levels in for the ETFs. And you want the rest, you got to join the Discord community. All right? Appreciate everybody that came through the live today. Make sure you follow us on YouTube and TikTok. And I will see you all next session. I'll probably come back on live on Friday. See what the market's looking like to close the week out. Even though I don't like trading Fridays, let's just take a look. All right, y'all.